Hey, what's going on, guys? It's James here, and I wanted to shoot an update video for you. A lot of people are probably wondering what's going on with the market right now, and of course I don't know for sure what's going on, but I'll give you my opinion on things. Just looks like a typical correction. There's nothing really that is scary, right? It shouldn't be scary to you. If you haven't been doing this very long, it might be scary. It was very scary for me in 2017, so keep that in mind. It's normal, but what's happening right now is, we're going through a correction, and we need to fill some gaps and we need to test some old support levels, and we'll see what happens. But I see a lot of people on social media. There's basically two camps right now. There's the one camp that's super bullish, and they're saying that buy the dip, and there's the other side of the coin where they're super bearish and they're talking about new lows already, right? Which is funny because I didn't see anybody talking about new lows a couple of weeks ago when I was talking about them. Well, I take that back. I saw a couple people. I shouldn't say nobody. So let me just kind of draw up some numbers, show you some zones that you should be watching out for, kind of show you what you might want to keep an eye out on. So first off, this is a weekly chart, and the first thing I want you to look at is this line right here. This is a 21-week moving average. Now, different people feel differently about this. Some people like the 21-week moving average, some like the 19, so we'll look at both of them. The 21-week moving average right now is right at $7,059. It should, in theory, act as strong support. If we do get down to that level, it should, and it doesn't guarantee it, but it should act as support. Okay. If we change this to the 19 week, it changes a little bit. It makes it 7,398. Same thing, it should act as support. And there is something else that it lines up with nicely. Both of those are right in this zone of this 61.8 fib, okay, which is right around the $7,200 area. Okay. So a couple things to consider there. We also have this level right here, which acted as strong support around 7,500. Okay, so there's going to be some battling going on. When we get to this level, I don't suspect that we're just going to blow right through it. We could bounce off of it, or we could, find a battle here, consolidate a little bit, and then go down a leg further. Just something to watch out for. Also, if we put a volume profile on the screen here, and we make this chart show from January 2018 until now, it looks a little messy, but just kind of bear with me. We have some gaps here that might need to be filled in, okay? So let me draw on here. Talked about these in previous videos, but just real quickly, this is a big gap. Technically, I'd like to see this fill, okay? What you get with these big volume bars can also act as support, and you can see we've got a giant volume bar right around this 8,500 area. That lines up with two important levels. That lines up with the 84.98 fib, which is the 50% retracement level. Okay, that's going to be a strong level to watch. And it also lines up with the CME gap, right? That gap that needs to fill in the Chicago Mercantile Exchange, right? $8,500 is the area for that. So there's a scenario where this would come down and bounce off that and go back up, and that would be the end of the correction. I don't think that's what's going to happen, but it's possible, so you should be aware of that so that you're not sitting on your hands waiting for 7,000 and then just completely miss your buy-in, okay? If it falls through that level, I think it's very likely that we'll go down to 7,200 to 7,500 that I just talked about, and then if it falls through that level, I think we probably will go down and look at testing 6,000, right? $6,000 was the support for basically all of 2018 over and over again. So I suspect that's going to be a very strong support line, okay, but we'll have to see. And if we slip through that by some chance, we've got these great big volume gaps down here, okay, and with these volume gaps, this big line around $4,000, again, it should act as strong support. No guarantees, but I know I shot other videos talking about the possibility of going to 13 to 1,800. It is a possibility. I just don't think it's the most likely scenario. I think, if anything, we probably will stop in this area. I think this will probably be the line in the sand that we just don't cross. So if we get down here and we do some consolidating, it would fill in these gaps, and that would be beautiful. And it would make the next bull run that much more friendly, if you will, because people wouldn't be looking back on, man, we never filled that gap, and it would relieve a lot of the tension of worrying about a sudden crash. So that would be a good thing. Ideally, what I would like to see happen is I would like to see us come down and fill this gap. And also because that would allow me to buy the most Bitcoin, right? Which would be ideal. We all want to have the most Bitcoin possible. A couple other levels to watch out for. And again, I'm going to remove the volume stuff because it's hard to see with it. But a few things to watch for. Number one, be careful with anybody telling you to buy the dip, because this isn't a dip right now. This is a downtrend. So let me quickly explain the difference in a dip and a falling knife. Okay, they look very similar, but they're very different. When you have a dip, what you're in is you're in an uptrend. So you'll be moving up, you'll come down, people will buy this dip, you'll go up, you'll come down, people will buy the dip, you'll go up, so on and so forth. Well, the reason that buyers are buying these dips in an uptrend is because they want to ride the trend. They think the price is going to go higher, and they want to buy here, and they want to hold and ride it until it breaks, and then they want to sell. That's how the professional traders work. Okay, that's how the big money, millions of dollars, people like that. That's how they trade. Okay, there's a huge difference in a dip and a falling knife. A falling knife happens in a downtrend when you're doing this, and the difference is this dip right here. Well, it doesn't even look like a dip, right? The difference is this dip, buyers are not lining up to buy that, to hold that. They're not buying that going, all right, we're going to new highs, right? They're not euphoric. They're buying it specifically to sell the rally. So they buy the dips and sell the rallies. And if you're wondering who does that, well, that's how traders work. In the last 24 hours alone, I've done a half a dozen trades. Not an exaggeration, not a round number. Literally 6 trades in the last 24 hours, 5 of them today. And they were all buying the dip and selling the rally, buying the dip and selling the rally. I trade on a 5-minute chart. So those dips and rallies happen all the time, and I buy them and I sell them. That's how I make a living. Okay? So bigger traders than myself, guys trading hundreds of millions of dollars in volume, that's how they trade. So they're buying those dips up, and it looks like it's going to rally, but they're not buying it to rally. They're just buying it to sell it. Okay? So that's what a falling knife is. So if you catch that thing down here and you think you're doing good, it'll trick you. It'll go up and you're like, yes, I'm so good. And then all of a sudden it'll dump on you. Maybe while you're sleeping. Maybe while you're not at your desk. Maybe when you're not around to sell. Okay? So that's what a falling knife looks like. We're still very bearish. There's nothing about this chart that says that we're bullish. If I look at I just showed you the weekly stuff. If we look at a daily chart, okay, we have something called a 50 moving average. It's a simple moving average for 50 days. And basically, this is supposed to act as support and or resistance. When we're underneath it, you can see it and it acted as resistance. When we're on top of it, it acts as support. We came down and we tested it a couple days ago on July 15th, technically yesterday for me, and we bounced off of it, a hard bounce. We bounced $1,300 off of that line. And I'll be honest, I thought, man, that's a little stronger bounce than I want to see. I had drawn a line up here and I said, if we go past 11.3, I'm going to get really nervous about this being in correction. And fortunately for me, we didn't. We stopped, and you can see where we stopped wasn't an accident. It lined up perfectly. Look at this, lined up perfectly with this low, right? So this ran into resistance, nothing special there. And then, on July 16th, we came down, and it didn't slow anything down at all. It just blew right through it, right? I was actually in a trade. I had bought around 10,390, and it got up to around 10,500, and I was like, man, this looks sketchy. So I sold and closed my position for a really tiny win. And like 10, 15 minutes later, it just started dumping, right? Dumped like $700 in like 20 minutes. And then just kept going down. And this line, it didn't slow it down at all. So now we're underneath the 50-day moving average, and that's very bearish in nature. Now we're going to go, if we do go up, it's going to act as resistance instead of support. Okay. We also have to talk about $10,000. I've talked about this in previous videos, so I'm not going to go super long-winded. Essentially, it acted as a FOMO event when we were going up. People got excited. They thought we were going to new highs. So the $10,000 barrier, once it was broke, became very exciting, and up we went. Well, like I talked about a few days ago, it's now the opposite. Now we're underneath it, and not just underneath it temporarily. We closed a daily candle under it and closed significantly under $10,000. Okay, so the panic is starting. And the lower this goes, the more the panic is going to ensue, right? If we get down to 8,500, even more people are going to panic. If we get down to 7,200, even more people are going to panic. And the one X factor that many people are forgetting about is the bear market is still fresh in everyone's mind. So when we start going down, especially if they don't understand what a correction is, they're having flashbacks to 2018. Oh my God, is this another bear market? Oh my God, are we going to new lows? Again, we're already seeing it on social media. People talking about, going to $2,500, for example. The more panic, the lower the price is going to go. That's just the way the market works. Okay. Also on the daily chart, we have a confirmed double top. I talked about this the other day, right? Once we closed under this red line right here, once we closed under the neckline of this double top, super, super bearish. And you can go back and look at Bitcoin's history. Pretty much every time we've had one of these, we've had a correction or at least a big pullback. Okay, so our double top is in. If we go to the 4-hour chart, it's bearish. It's more bearish news, right? We had this head and shoulders over here. It's right here. And this has a target. Once we broke the neckline, the target on this was about $8,800 to $8,900. Okay, so we're not there yet. So bearish news. There's nothing bullish. I'm not seeing anything bullish in the charts. I don't know if somebody else is seeing something that I'm not aware of, but all of this looks completely bearish to me. You can see that we bounced off the support down here around 9,300. We went up. We were unable to break through resistance at 9,651, and chances are we're probably just going to keep going legs down. So just be aware of that, right? Be aware of what's going on. You know, start to get an idea of what levels you want to watch. Start to get an idea of where you're comfortable putting your money in at. Also, remember, it's very unlikely you're going to buy the bottom. If you're trying to buy the bottom, good luck. It's very difficult, nearly impossible to do. So you need to be playing with money that you can afford to lose, because you might put in money at 8,500 or 7,200 or at 6,000, and it might just keep going down. Okay, so you've got to ask yourself, am I investing for a year, 2 years, 3 years, a week? You know, am I going to put a stop loss in, etc.? If you're trading, you should always have a stop loss. But if you're investing, maybe you don't care about it. Maybe you're like, you know what, if I buy $6,000 Bitcoin, I don't care where it goes. I'm comfortable with $6,000 Bitcoin. Okay. Actually, I'm looking over at my Coinbase Pro on my other screen. It looks like the market's going down even more. So I'm going to have to wrap this video up. There's probably getting ready to be a dip opportunity on the 5-minute chart. So my name's a calling me, but this is what I do. I bought there, I bought there, I bought there. Whoops. Man, I really hate these red lines. Let's see. I did not buy there. I bought up right there, sold right there, and then it dumped. I'm missing a trade. But anyway, that was my day, right? Boom, 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 boom. And I know I did 5 trades. I'm not sure where the other one was at. So that's what I'm getting ready to do. I'm going to watch this thing and you know, see where it goes. And I'll be buying that dip and selling that rally like I alluded to earlier in the video. Hopefully this helped you all out. I really, you know, I'm not telling you what to do. I'm just trying to introduce some perspective and show you some levels that you can do your own due diligence on. And just remember that, you know, the reality is buying Bitcoin based on an arbitrary number. Oh, I'm going to buy if it gets to X number. That's not really investing. That's gambling. Okay. The thing that you want to do is look at the chart and find, you know, try to find some type of structure, try to find some type of reversal signal that says, hey, the downtrend is over and you're getting ready to go back up, right? That's what you're technically looking for, is some type of reversal that lets you know it's time to buy. Now, by doing that, you'll miss the bottom, guaranteed, right? Because you won't know it's done until it's already going back up, but you'll avoid falling knives. If you don't want to do that, if you're a gambler and you're like, you know, I don't care, I'm just going to buy it, I'm going to gamble, by all means, my friend, gamble on. I get it. I'm not knocking you for it. Each their own. Please remember, I'm not a professional financial advisor. I am literally some guy sitting in a spare bedroom. So please do your own due diligence and seek out professional investment advice before making any type of investment. If you enjoyed this video, please be sure and give it a thumbs up and subscribe to the channel. If you're watching it on Facebook, please be sure and give it a like, and check the description for more links where you can follow me on TradingView and Twitter, etc.